Thanks for joining us on BloombergQuint. I have with me S. Subramaniam, Chief Financial Officer at Titan. Thank you, sir, for your time. First of all, congratulations for an amazing start for FY18.
Yeah, thank you.
So, the jewelry business totally accounted for 83% of the total revenue. I want to understand, do you expect to continue this momentum in the next quarter, or is it one of a case?
Jewelry will contribute a significant portion of our business, and that's, I think, that's a given. It's been generally in the ballpark of 80%. And we do expect also growth significantly higher there because the room for growth also is very, very high. We have a 4-5% market share. So in a large industry, so it's only logical that the contribution of jewelry in future will be high. Yes, we did have a great quarter, and the quarter was good for various reasons. I think some of the regulatory things which have been addressed by the government over the last couple of years in trying to bring the economy into a more formal one and more organized is panning out. So with the PAN card earlier, and then the excise duty in jewelry, and then the demonetization followed by cash limit of 2 lakhs for purchases, and now GST. I think these are all positive for the company, for the organized sector, and specifically for us. And we have therefore seen a lot of traction, market share gain over this whole period, as and when it's panning out. So April was great. We had a great Akshaya Tritiya, and June was also very good. We did of course run an exchange program which ran very well for us. But there was also an element of advanced purchases in June, the second half of June for sure. We estimated to be in the ballpark of 250 crores. So to that extent, the 55% growth that we showed in jewelry possibly could be 42, 43. But nevertheless, it's a fantastic growth anyway. Now, do we expect this to happen every quarter? I'm not sure. It's just asking for too much. But the fact that there is a shift in consumer preference is very evident, and people are coming to a safer option in terms of organized trade. And that shift is very good for someone like us.
And what do you think will drive this segment? Is it going to be the premium brands or the mass brands?
Actually, it's both. We have not really been very strong on the wedding segment or the high value diamond segment because of the same reason, which was PAN card and people not adhering to it before. But now, with more and more people comfortable with PAN cards, and you see the economy is getting more digital, payments are largely having to be made digital or through banks. I think that comfort is coming in, and therefore we are focusing on that segment, and we are actually seeing better traction there. Right. In the top end. So, yeah, to answer your question, yes, I think.
Does that go for the margin as well?
Margins may not necessarily always be better because high value gold jewelry for weddings might not necessarily be higher margins. But it's good. It brings you a segment of the market where we are not strong at all. Right. So it's entirely incremental margin, so it's good for us.
Right. And what about discounting now? You currently there's going discount of 5 to 15% on the Tanishq.
That's a norm we do every other quarter. We have a promotion for diamond studded jewelry, and then it goes up to 15-20%. So that's a normal thing which we do for about a month or so, month and a half in each of these quarters. So every year, if you see a pattern, it's generally between July August is one activation, as we call it here, and then another one sometime in Jan Feb. So that's a norm. I mean,
will it have any implication on the next quarter?
No, it doesn't. It doesn't. So what it tends to do is whenever we have these activations, the diamond studded jewelry sales in that quarter jumps. Right. So if they were, for example, contributing something like 23-24% of our revenues in the last quarter, it jumps to maybe 35 to 40% in these quarters. When it's an idea, because these are actually quarters where sales are generally low because there's no festival. These 2 quarters don't have too many festivals, so it's to spur that behavior that we brought this in, and it helps therefore taking the contribution of diamond studded jewelry, and which is very good for margin from a margin perspective. So even after the discounts, the margins are still much better.
Right. And what about stores? How many stores are you looking to open?
Well, we are looking at about 25 plus stores for the year. It will be very difficult to tell you how much it will be in a quarter. But we've generally been lagging a little in the first quarter. Hopefully, we're trying to make up that in this quarter.
And what about the same store growth? Do you expect it to improve now?
Same store growth is what contributes most of our revenues anyway.
Right.
I would say that if you look at the numbers we've already published, 55% was the total sales growth of all stores. 51 was same store growth. So it's pretty much that. So without same store growth, you can't get your 20-25% growth.
Right.
Yeah.
And what about watches and eyewear segment? They sort of have a flattish growth in this quarter.
Yeah, so let me clarify that. I think watch segment particularly actually did very well on the domestic side.
Okay.
We had a 9% volume growth, which is coming after a very, very long time. The problem that we've had is that the exports have been underperforming and quite significantly at that. Something like a 25% reduction in sales there. And that's largely because the Middle East has not been firing. It's having its own issues. So we've had a significant decline there. But in the local domestic market, I think traction has been quite good. It's also a fact that we didn't have the promotions that we had last year. For the same time quarter, we had certain promotions which we ran last time, which was not happening this year because of GST, impending GST, etc. There was an issue of stocking. So therefore, that also disrupted the overall growth. So I think we're quite happy the way it's going.
It's for the eyewear.
Eyewear business also be exactly the same thing. I mean, particularly the eyewear business, that's a prescription eyewear business, actually did quite well as per our plans. The problem has been on the sunglass business. And sunglasses is a category where we are actually very, very disappointed with the rate which has been fixed on GST. 28% is extremely high. Okay, it is actually not a fashion statement. Sunglasses are protective. They are required for UV, and in a hot country like India, not having sunglasses actually it's not good for you. We have been representing on this, and we hope that the government does accede to our request to bring down the rate of sunglasses from 28% to whatever. The point is that for the impact that we had on sunglasses was very, very significant, and that's the reason why the overall growth was muted for the division. It's continuing even in July. The sunglass issue, it's continuing because the rates are very high and people are not buying at this point in time. I mean, I'm talking of the trade itself, the channel. So it's something we hope should be addressed as soon as possible.
But from Titan's perspective, what efforts are in place to increase the growth of both eyewear and watches?
No, we have, in the case of watches, there is a program. We have been investing significantly on brand development, products. New products are coming up. There are a lot of technology-assisted products, smarter products, like the safety watch, and there are many more which are coming up. The reflex band, the fast track reflex band was a huge success. It's running out of stock everywhere, and so there are products which are very exciting coming up. In the eyewear business, I think we are looking at profitability of each of the stores, so we are addressing them, and therefore we are starting to see the traction now. Okay, so it's happening well. Unfortunately, while that is doing well, we have the problem with sunglasses, and it's a regulatory issue.
Pondering over a price cut there as well? Is that
no, sunglasses we can't take a price cut. If anything, the rate of tax has gone up substantially.
Okay,
we would be forced to take a price increase, and in a market which is tough. So that is the sad part. Yeah.
Right. And lastly, what is your outlook on margin, both watches and eyewear?
Well, watches, I think a double-digit margin should definitely happen, and we are looking at not just top-line growth, cost also in a big way. Margins have been, overall gross margins have been consistent. There's not been an issue there. So those are fine. Watches, the only issue that we've had is the 28% on watches GST rate, which is a little high. We may be forced to take up the prices shortly, maybe in a couple of months. But that will possibly offset the increase in the costs that we are incurring. In eyewear, I think it's more about how to manage the situation with sunglasses. We don't have a problem with the prescription eyewear. Sunglasses is where the problem is. It's an industry-wide problem because of the rate. So hopefully, if we can get the rate down to maybe 18%, things should get back to normal.
And to add to that, how does the coming quarter looks like?
Well, early to say, but the good sign is that the traction we've been seeing in the last few quarters, maybe 3-4 quarters at least, in the jewelry business has been very, very, very promising. The market share gain that we've been seeing is good. So that does give us a lot of hope that performance should be quite good.
Right. Thank you, sir, for speaking to BloombergQuint.
Thank you.